Recently on Real Ag Radio, I wanted to dive into what the heck is going on in canola. To do that, I chatted with Jonathon Driedger of Leftfield Commodity Research based out of Winnipeg, Manitoba. Okay, I want to talk about canola. What is going on? We are almost at $800 on November canola. So Nov canola right now trading at 797.1. We have it has happened in a relatively short period of time. We hit the contract low at 617 back at the end of May, so it's like a month and a half almost. What is driving this market higher?
Yeah, it's really, we talked about how difficult it is to get a sense of what the supply is, say, for corn or soybeans in the US. And I think for years, and you'd probably agree, Shaun, canola is notoriously difficult to get a sense of what the yield is in Western Canada. So that really is one that is going to have a hard time settling out until the combines really get rolling. But I think in the case of canola, and similar to some of these other markets, the pendulum simply swung too far to the downside on a risk reward basis. We did have dryness concerns coming in, and it just, again, got a little too cheap. Funds, got heavily short. So part of this swing to the upside is just, again, we overshot to the downside, and there's some correction. So fund covering, acknowledging that there's been some dryness and so on. But but within all of that, I guess maybe the more important question today is this a reasonable price for canola? And that's a hard question to answer. But certainly one thing is the canola crop is getting smaller in Western Canada. I think there's little doubt about that. Again, just we talked about in the U.S. how difficult it is because rain has been spotty and it's variable even within small areas. And I think you can say the same for much of Western Canada. But I think in overall, certainly that canola crop is shrinking. We are going to have to ration demand. And so how much demand we have to ration? Again, it's hard to know until we know what that crop size is, but maybe the market is starting a process that needs to happen. We simply will have less canola than maybe, people were thinking 2 months ago, for example.
Yeah, and I should apologize. I said contract low. It is not the contract low. It's the 1-year low on that November contract. Of course, the contract low has been significantly lower than the price I gave you going back a number of years. So I agree. I have, I haven't driven through the northern part of Saskatchewan. I know Alberta for the most part. It's brutal. Okay, it is. Alberta's like, I'm not gonna. I was gonna say write off. It's not a write off, but it's very, very poor. Saskatchewan's more of a mixed bag if you cut it north south. North being a lot better for the most part. The southern, like around Highway 1. It's okay. A lot of farmers I talk to get out in the field, not as good as it looks from the highway. So, don't do the 60-mile-an-hour crop tour. But what I really notice is the staginess and the poor establishment in some of those dry areas. I drove across, some of the locals in Southern Alberta will know the Star Line. From Claire's home basically to Barron's as just an example. Drove it last night. A lot of stuff in flower and a lot of stuff looks like it's just in rosette. That's going to make harvest really, really difficult. And how do you have a yield estimate on that? Like so basically, I'll put it to you this way. Are we basically looking at halfway between 21 yield and 22? Is that the number that we would put on the board?
Yeah, well, that's a good question. And I guess at this point, I would say for ourselves, we're not quite that pessimistic yet. But, having said that, I mean, certainly, we're walking our number lower. And again, it's so hard to know because it's so variable. And 21, certainly we're better than 21. There's certainly too many areas.
Wait,
yeah. And I don't think anyone is sort of arguing or suggesting we're at 21 levels, but certainly there's maybe regions that do look like that. So, what's the right number? 38, 37 on a national basis, maybe lower. Like it's really, really difficult to know. I think one of the things too, as you try and sort through it is, let's just say, for example, the northern half of Saskatchewan, which definitely looks better than the southern half on average. That tends to be sort of a big yield, big production, bigger acreage area. So you sort of got to wait a little bit, maybe where those bushels typically would be. And so again, it's really difficult to know how to sort of handicap that in terms of what that final production is. But, if the number is 37 or 36, at that point, we're making some pretty deep cuts into what export potential is, and so then the follow-up question that we're thinking through with some of our clients is what level does the market need to get to ration exports down to a number that fits the production? And that's a function of EU production and Australian supplies and so on and so forth. So there's multiple layers to the onion. But nonetheless, we are going to have to ration canola demand. And so is $800 canola the right or fair price? Obviously, soybean values have a function of that as well. But a huge swing in the relative value between canola and soybeans today. Those are all moving parts we're watching. Underneath it all is we do have some real challenges with this canola crop up here in Western Canada.
Okay, so let's put our farmer hat on. We're marketing. What do we do about this? And a lot of producers are going to say, well, I don't know what my yield is. I'm not going to market. And I'm going to say, well, there's options out there, but we're not even going to get into that debate. If assuming that I am going to have some crop, we've been hearing from a lot of analysts we've talked to, and this is US and Canada, take risk off the table, sell into some rallies. But, look at canola. You could have got too aggressive too soon in the past month. Woulda, coulda, shoulda. But what do we do from here, John? How should we be looking at this? Are we going to be back to the contract high of 880, or are we going to be trading lower from here? How do we market in this?
Yeah, yeah, that's a huge challenge.
Not to put you on the spot, John. Not to put you on the spot.
I think that's fair, and I think it's an important question. And so, and these are conversations we're having with our clients as well. So, I think first of all, if someone is really lightly sold and their crop looks okay, I think there is an element of needing to play a little bit of defense, and whether that's pricing a little bit, whether it's again you look at different tools, put options give you that downside protection with no production risk, all the upside, but they are expensive. But something like that, it would be something to consider. The one thing I'm really cautious about in these kinds of environments, it's easy to get caught up in it and being a bit blindly bullish. We can talk about rationing export demand. That might well be happening. And it might even happen at a lower price. I think about last year, for example, we did a lot of export demand rationing, even as the absolute price went lower, because we were still expensive on a relative basis. And so those are the sorts of things I think we need to be a little careful of. So if soybeans, for example, trade lower from here and EU rapeseed prices stay a little soft, maybe we don't need to go higher. And so those are the sorts of things where I'd be a little cautious about being presumptuous that we need to go higher, even if our yields are going lower. Having said that, I mean, if conditions stay poor and we start lopping multiple bushels off of this yield number, we could make another leg higher. That is a plausible scenario. But again, I think a person wants to not get overly aggressive because of that potential. But there is an element of playing a little defense. If a person's a little lightly sold, taking a little bit off the table. Again, I think seeing how soybeans trade over the next couple of days here, maybe that's a little bit of a warning, perhaps too. We can very quickly get really expensive on canola and suddenly look back and say, geez, our crop is getting smaller and yet our price is still declining. And that's a plausible scenario as well. So there's so much uncertainty right now, both on the demand side and the supply side. Again, we're always cautious about being complacently bullish in a market like this, even though the price is going up and the crop is shrinking.
Yeah, on that Nove contract, 880 is the 52-week high. But if you look at a 5-year chart, then all of a sudden you're like, we got a long ways to go, baby.
Well, that's right. And again, even some of the conversations we've had with clients this past week, and then the 2021 conversation comes up, and it's like, okay, so first of all, 2021 was a disaster everywhere, and I think, as we just said a few minutes ago, we're not looking at a 2021 yield number. Second of all, these other dynamics in 21 as well. In the middle of COVID and palm oil going through the roof and all those sorts of things. There's these other dynamics that all came into play as well. So I think it would be misplaced to say we're walking into a 21 scenario, of course, which is where the peaks of those charts are. But nonetheless, I mean, the crop is getting smaller. I mean, that's that part we know. It's just, is the market doing enough already? I'm not sure that it is. But it might be, and if that's the case, it's easy to look back, 6 weeks from now and say, you know what, maybe that crop fought through it a little better than we thought. Soybeans pull back. There's some demand rationing that's already taken place, and suddenly we're $50, $75 a ton lower and wondered what the heck happened, even though yield will end up being smaller than people thought it would be in May.
Does
We've been there before, right?
Yeah, well, and you look at for anybody that sold canola at $1,200 for November, congratulations. You need to help me with my sports betting.
Yeah, that's right.
So to wrap up, if assuming this supply concern continues, we're getting a little bit late for rain to rescue some of this crop. It actually just maybe makes harvest worse in some cases. Two supply concerns 2 out of 3 years. Does it give any caution to how much crushing capacity we could have on the prairies as we see a lot of that expansion based on renewable diesel and the potential there? But you got to have a feedstock. Does this sort of, I don't know, a sober second thought?
Yeah, we've thought a lot about that. We've done quite a bit of work ourselves with that for clients and some different studies we've done, thinking a lot about just all of that expansion of capacity and how these pieces all work. And I think there's pretty widespread consensus that there's maybe a little bit of room to increase acreage in Western Canada, but we're not that far from the ceiling, relatively speaking here. I think for canola acres, and so it's yield that's going to have to do the work. And I think our peak yield was in 2016, something like that, 2016 or 2017. So it's been a long time since we've made a fresh high in yield. The last several years, it's struggled. Okay, you could say rain and maybe we get some better moisture conditions. Is there more going on? I'm not an agronomist. I'm not a scientist, so I can't speak to, maybe the technical aspects of why we keep struggling to have yields. Some of the dryness concerns are obvious. But I think that's a pretty important question. Now, as you think about this crush capacity, I mean, these are probably the sorts of companies that aren't very likely to just suddenly, kind of change your mind and throw in the towel. The likes of Cargill and Louis Dreyfus and Richardson and so forth. I don't suspect that they'll make plans and then just suddenly kind of shrug their shoulders and change their mind per se. Does that mean that every plant will come online? I guess time will tell. But certainly, there's some questions on the supply side here going forward. If we don't tilt that yield trajectory higher, it's been a while where we've been stuck here and not getting any upside in yields. And certainly that has some implications here as all these plants get built.
Yeah, but I think most definitely for sure. Hey, we've been talking to Jonathon Driedger, Leftfield Commodity Research. Make sure you go to leftfieldcr.com to find out more. Hey, John, thanks so much for joining us here today. Really appreciate it.
Yeah, hey, always a pleasure, Shaun. Appreciate being on the show.